Our time's getting short here on Open Line tonight, but we do have a few minutes left for your phone calls if you have one about the economy. 615-737-PLUS is the number to call. It's right there on the bottom of your screen. Julio Rivas is our guest tonight from Lipscomb College of Business. One thing that we have not talked about tonight is the stock market.
Oh,
and quite frankly, it puts me in a bad mood.
That's a bad topic, right?
I know it really is. I told you I have not opened my statements, I think, all year because it scares me.
Yes.
Yeah, and I know I'm not alone.
Yes.
It's ugly right now. What does it tell us about the economy?
Yes.
What clues should we be taking out?
I would say the stock market, and by the stock market I will talk about the S&P 500 because that's the easiest index to track. We will say that that's a leading indicator to GDP. What does that mean? It means that if it goes down, usually GDP, that is the economy, the gross domestic product, goes down, right? If it goes up, usually the GDP follows along, right? So it's been going down. We all know, if you can look at your statements, you know that it has gone down, but that is normal, right? We talked about cycles earlier today, and the stock market also moves in a cycle, right? Up and down, up and down. But I was mentioning to you earlier, it's the S&P 500 on average makes, I would say, a 10% return per year,
Which is nice.
Which is very nice, right? Now this year, most likely, you will not get a positive 10% return. But just hang on. The market is going to recover. Well, that's what historically has happened. What if the market doesn't recover? Well, if the market doesn't recover, it means that our economy is completely destroyed.
Yes, we have bigger problems.
We have other problems, very, very big problems. We're going to get out of this one, and the stock market is going to go up again. It's about riding it out, right? Yes, and one thing that is very important, yes, if you look at your statement, if you look, you must, I've lost 20%, I've lost 30%, I know it is hard for us to see if we've been losing money. It is hard for us to think, am I going to be able to retire? Am I going to be able to do what I want to do? I would say, hold on. It's as with everything, prices go up and down. Now, it also depends on how you invest your money, right? We were mentioning S&P 500. If you have money in a fund that is very well diversified, well, it flows like that. Now, if you put all of your money into one stock, that is a complete different ordeal, right? Yes. You're taking more risk. Is that necessarily bad? I would say no. It all depends, if you're 100% that company that you're investing is going to do well, it's going to be good. I personally wouldn't recommend you to do that. I'm more into diversifying and investing into different options. But it's and you also got to be careful. Like about a year ago, people were very, very bullish, very, very enthusiastic with Bitcoin. Yes. Where does that stand today? No one seems to be talking about it right now. Yes. But it is at a price spot that is higher than what it was after COVID. So Bitcoin is it's at a very interesting point in my opinion, because a lot of people that were speculating, they probably are not getting back, but the ones that are using it are people that really believe this is the way to go in the future. And I personally think that there's a lot of value into it, and looking into it, but to be used as a currency and not as an asset to speculate. Gotcha. Yeah. Oh, very interesting. Yes. And then we had this big issue with the meme stocks, and that is also a problem. I would say you got to be very careful with that. If you see that a stock price has been going up like crazy, well, you need to know the reason why. Yeah. I showed to my class this morning, it's one of those stocks, it's losing $1.10 per share, and people are paying $25 per share. Say, does it make sense to you to pay $25 for someone that is losing $1? Yeah. It makes no sense to me. It makes no sense to me. Wow. But it requires a little bit more of analysis. Well, and just like our entire conversation today, and in the weeks past when we've had these conversations, the economy is so nuanced. It's not flip this switch and flip this one off and then turn. There's so many different factors. As we were saying earlier, there's no two crises that are the same. Yeah. The two recessions are not the same. All of them are different. All of them have different variables to look at. But all of them, we've been able to get out of all of them, and I think this will not be the exception.
Timing-wise, is there any rule in history that says if you can just ride it out for 3 years or ride it out for 18 months, we should be on the other side?
Yes. Again, that's all different, you know.
I like certainties.
Yes, me too.
You could just tell me.
Yeah,
wait until March.
If I were able to do that, oh yeah.
You'd be a rich man.
Yes. I would be here I'm here just for fun, but it would be even more fun, right? But yes, it is hard to tell. But what I can tell you is I really think this is not going to be like 2000. It took a long time for us to recover from 2008.
It did. Yes.
I don't think this is going to be the same case. There's people, I've seen this in social media, that overlap the S&P 500 graph from 2008 and the graph from right now and say, oh, they're both moving in the same direction. Well, yeah, they look similar. That doesn't mean that it's going to repeat. But then I say, hey, look at the axis. In 2008, the value was 1,500, and now it's 4,000. You know, like you know, the market went more than double. You know, its value in 15 years, or however long it was. So that's what you need to be paying attention to. You know,
we're not just going to repeat. It's its own deal. It's
its own deal, and at the end, you know, things are gonna go up because the economy is gonna go up again.
As we were talking earlier, I'm just very interested to see if those prices, especially at the grocery store, just stay the same, which I'm hoping not.
Yes,
it's just unbelievable.
Yes,
especially when salaries aren't keeping up.
And I mean, and that is hard for people's budgets. Now I hope that gas prices also, you know. I mean, I know they've been moving up recently, but I hope they move back down, because that is probably the hardest item in a family's budget.
For sure, because there's only so much cutting back you can do if you have to use your car to get to work or whatever.
And I mean, there's no substitutes. There's no cheaper coffee. There's no cheaper. I mean, there's cheaper gas, but.
Well, you can't. I mean, it's like here we don't have the subway. You can't say, "Well, I'm going to ride the subway."
No. I mean, as cheap as it gets, it's going to be something that you need to consider.
But again, we were talking too that thankfully working at home has become more the norm for a lot of jobs, but some of them can't. I mean,
some of them can't. Yeah.
A nurse can't work from home necessarily. You know, that sort of thing. But that can help ease the budget a little bit.
Yes, especially if you live far away from your work center. I mean, that definitely saves you money, but also saves you time.
Yeah. As we wind up the show, we have a little less than 2 minutes. What are you telling your students to be watchful of right now?
Oh, I always ask them to watch the news, of course.
Yeah, well, good.
But I say, you know, see what the Fed is doing, you know, and a lot of things, expectations are important, and what the market expects, that is the analyst, right? Because the Fed might say something, you know, but if we expect a bigger or a smaller, you know, that is kind of like those indicators that. How the market is seeing whatever's going to come on in the future.
Yeah.
That consumer sentiment, you know, from Black Friday, that's an important one, you know, and keep on track of all those things that are going on. You know, that will give you hints on how are the rest of us are seeing what's going to happen. Because the government or the Fed can create policies. But us here in the real world,
it's our living that determines things.
Yes. And if we see that things are getting more expensive, or if we see that there's less of this or less of that, I mean, we're going to act accordingly.
For sure. All right, Julio Rivas, thank you again for joining us tonight.
Thank you, Carrie. I appreciate the invitation. Always happy to be here.
Well, I'm sure we'll see you here in just another few weeks.
Yeah, thanks.
All right, we're going to take a quick break. When we come back, I'll tell you what's on tap for the rest of the week. Stay with us.